It finally happened. The phone call every investor fears, and every insider knew was coming, was just made. Reports are flooding in that a major U.S. bullion bank just refused physical delivery of silver to a massive client. Instead of the metal, they offered a cash settlement. Do not let that boring legal term fool you. In the real world, cash settlement means they don't have the silver. It means the vault is empty. It means the emperor has no clothes. Imagine you go to a car dealership. You pay for a Ferrari. You sign the papers. And when you show up to drive it home, the dealer hands you a check and says, "Sorry, we sold that same Ferrari to 50 other people. Here's your money back." That is exactly what is happening at the COMEX right now. This is a force majeure event in everything but name. The game of musical chairs has stopped, and the banks are realizing there are no chairs left. For decades, we have warned that the precious metals market is the most manipulated market on planet Earth. We told you that the price of silver you see on your screen is a lie. It is a phantom price. It is a price derived from paper contracts, digital entries, and high-frequency trading algorithms that have nothing to do with physical reality. But today, the reality has come crashing through the front door. When a client stands for delivery, they do not want fiat currency. They do not want dollars that are being printed into oblivion by the Federal Reserve. They want the metal. They want the asset that has no counterparty risk. And when the bank says no, that is a default. They can call it a settlement. They can call it an administrative adjustment. They can use whatever Wall Street jargon they want to use to hide the truth. But it is a default. And this is the spark that lights the fuse. You need to understand the mechanics of this fraud to understand why the price is about to go vertical. The COMEX, the primary exchange for silver in the United States, operates on a fractional reserve system. Just like your local bank doesn't actually have all your cash in the vault, the COMEX does not have all the silver they sell. Estimates suggest that for every 1 ounce of physical silver sitting in a registered vault, there are anywhere between 300 to 500 paper claims on that same ounce. 500 people think they own the same bar of silver. As long as everyone is happy trading paper back and forth, the scam works. As long as hedge funds and speculators are just betting on the price direction without ever touching the metal, the casino stays open. But the moment big players, I'm talking about industrial giants, sovereign wealth funds, and family offices, decide they want to take their chips off the table and hold the metal, the system breaks. That is what we are seeing today. This rumor of a forced cash settlement is the first crack in the dam. But here is the smoking gun that proves this isn't just an isolated incident. This is a global, coordinated breakdown. Look at Shanghai. While the U.S. paper price is being suppressed and held down by these bullion banks, look at what is happening in China. Premiums on the Shanghai Gold Exchange for silver have hit an all-time high of 15% over the U.S. spot price. Think about what that means. Arbitrage is the most basic force in finance. If silver is $25 in New York and $29 in Shanghai, a trader should be able to buy it in New York, ship it to Shanghai, and pocket the risk-free profit. That buying pressure in New York should raise the price, and the selling in Shanghai should lower the price until they meet in the middle. But that isn't happening. Why? Because the metal isn't in New York. You cannot ship what you do not have. The 15% premium in Shanghai is the market screaming the truth that the COMEX is whispering. It is screaming that physical silver is scarce. It is screaming that the West has been drained. For the last 3 years, we have seen a massive migration of physical precious metals moving from west to east. London vaults are bleeding. New York vaults are bleeding. And it is all flowing into China, into India, into Russia, and into the vaults of the BRICS nations. They are using the suppressed paper price, the price manipulated by Western banks, to drain the West of its strategic resources at a discount. It is the greatest wealth transfer in history, and the average retail investor is completely asleep at the wheel. But the window to wake up is closing. The disconnect between the paper price and the physical price is becoming unsustainable. We are approaching a bifurcation event. This is where the market splits in two. On one side, you will have the paper price. This might even crash. The banks might try to smash the paper price down to $20 or $18 to scare you out of your position. They will use leverage to paint a scary picture on the charts. But on the other side, you will have the physical price, the price you actually pay to get a coin or a bar in your hand. And that price is going to detach. You will see spot price at $25, but the dealer will charge you $40, then $50, then $100, because the spot price becomes irrelevant when there is no metal to back it up. This is exactly what happened to the nickel market on the LME recently. The price went vertical. The exchange had to shut down. They canceled trades. They changed the rules in the middle of the game to save the banks who were short. Do you think they won't do the same for silver? Silver is not just a monetary metal. It is a strategic military and industrial asset. This is the part of the equation that the Wall Street analysts ignore. They look at silver like it's just a rock. But silver is the most conductive metal on the periodic table. You cannot build a modern world without it. There is no green energy revolution without silver. A standard solar panel uses roughly 20 grams of silver. The world is installing solar panels at an exponential rate. Electric vehicles use up to 2 ounces of silver per car. That is twice as much as a gas engine. 5G towers, electronics, artificial intelligence servers, they all require silver. But here is the kicker. The Tomahawk cruise missiles, the guidance systems in fighter jets, the smart bombs, the torpedoes. The entire military-industrial complex runs on silver. And unlike gold, which is mined and then sits in a vault forever, silver is consumed. It is used up. It ends up in landfills. It is gone. We are burning the candle at both ends. Demand is exploding because of the green agenda and the war cycle, but supply is flatlining. The miners cannot just flip a switch and produce more silver. It takes 10 years to bring a new mine from discovery to production. 10 years. And right now, the silver price is below the all-in sustaining cost of production for many miners. They are not exploring. They are not expanding. We are in a structural deficit. For the last 3 years, the world has consumed more silver than it has mined. We have been filling that gap by draining above-ground stockpiles. We have been eating our seed corn. And now, the rumors of this cash settlement suggest that the stockpiles are gone. We are running on fumes. So what happens next? What happens when the industrial giants, companies like Tesla, Samsung, Apple, Raytheon, realize they can't get the silver they need to build their products? They don't care about the price. If silver goes to $100, an iPhone only costs a few cents more to make. They will pay any price. They will panic buy. They will secure inventory at all costs because the alternative is shutting down their assembly lines. This is the commercial panic phase, and it will collide with the monetary panic phase. Because at the same time industry is scrambling for metal, the investors are losing faith in the currency. Look at the debt ceiling. Look at the inflation numbers. The dollar is being weaponized and devalued. Smart money is moving into hard assets. So you have a perfect storm. Industrial shortage meets monetary flight to safety. And standing in the middle of this storm is the COMEX, holding a bag of empty promises. This cash settlement news is the canary in the coal mine. It is the warning shot. The banks are trying to quietly close out their short positions before the public realizes what is happening. They are trying to exit the burning building without shouting fire. But we see the smoke. And I have a question for you, and I want you to really think about this before you answer in the comments. If the banks officially declare they cannot deliver silver tomorrow, if they admit the vaults are empty, what happens to the price of the coins in your safe? Does the value crash to zero because the market breaks? Or does the value go to the moon because it becomes unobtainium? Does the paper price matter anymore? Or does the guy holding the physical ounce name his own price? Let me know what you think below because your answer determines your strategy. If you believe the paper price is real, you will panic and sell. If you understand the fundamental reality of supply and demand, you will realize that this is the buying opportunity of a lifetime. But you have to act fast. The premiums are already rising. The delays in shipping are already starting. When the general public catches wind of this, the inventory will vanish in 24 hours. You will go to your local coin shop, and the shelves will be bare. You will go to the big online bullion dealers, and you will see out of stock on every single page. And then you will look at the price chart, and it will be a vertical line. Do not wait for the news anchor on the mainstream media to tell you to buy silver. By the time they are talking about it, it will be too late. They exist to keep you calm while the insiders exit. They will tell you it's a transitory supply chain issue. They will tell you silver is volatile and risky. They will tell you to stay in the stock market, stay in the dollar, stay in the system. Do not listen to them. Watch what they do, not what they say. And right now, they are settling in cash because they are terrified of letting go of the metal. They are hoarding the real asset and giving you the paper liability. Flip that trade. Reject the paper. Demand the metal. If you own an ETF like SLV, read the prospectus. You are not the owner of that silver. You are an unsecured creditor. If the custodian goes bankrupt or if there is a systematic failure, you get nothing. You get in line with the other creditors. If you have unallocated silver in a pool account, you don't own silver. You own a claim on a bank's balance sheet. Get out of the digital illusions. If you don't hold it, you don't own it. This is not a drill anymore. The divergence between Shanghai and New York is the countdown clock. Every day that premium stays high is a day closer to the break. Every rumor of a cash settlement is a crack in the foundation. The physics of the market are taking over. You can manipulate the price of paper for a long time, but you cannot print physical metal. You cannot print silver. God created a finite amount of it, and we are using it up. The shorts are trapped. The banks are cornered. And history shows that when cornered, they will change the rules to save themselves. They will not save you. You must save yourself. Take possession of your wealth. Secure your future. Because when this rubber band snaps, the transfer of wealth will be sudden, violent, and permanent. Do not be on the wrong side of history. Get your metal out of the banking system immediately. Because when the music officially stops, and it looks like the music is stopping right now, you do not want to be the one holding a paper receipt for a bar that doesn't exist. Prepare accordingly.